What's going on, everyone? Welcome back to this multi-time frame forecast. We're going to be going over CAD Japanese yen. And like always, before we get started, I want you guys to do one thing, and that's like this video. Not only does it support us, but it really does give others the opportunity to see these videos, potentially learn from it, and potentially scrape away some pips as well along the way. So do us and really everyone else a favor, like this video, and we can get straight into this. This is CAD Japanese yen. If you don't remember, we had talked about this several months prior, so that's why we already have some stuff written up on this. But the great thing about this pair right now is it actually just validated recently within the last week or so. So if you don't remember, we'll just quickly highlight what we do. Go to the monthly time frame, starting on the line chart, looking at some critical areas of structure that are relative to where price is at or where it could potentially be going, in addition to looking for some general trend lines. So we can see right here, 1, 2, 3, completing a trend line, 1, 2, 3, 4, completing another descending trend line. So we have a channel within a smaller channel within this grander descending trend line channel as well. And in addition to that, if we go back to the line chart, candle chart, we can see that we have an impulsive leg to the downside with a nice healthy retracement back up. So we're looking for another break. And the reason why this retracement back up to this descending trend line is critical is because it actually overlaps with several different critical uh, So we can see that it's at the 61 fib level right here. Structural, there's also some structural level on the weekly and daily time frame, in addition to it being the trend line on the monthly time frame, like we talked about previously. So in addition to that, we also have this descending trend line, a counter trend line in our descending trend line channel, that whenever it breaks through and tests that it breaks through, we usually have a good fall. So just real quick to show you that an example, what happened right here is we had a nice trend line, but when we broke through, we ended up falling down dramatically. So same thing that we're assuming could potentially happen right here. That being said, the three areas of structure are the reasons why we're entering, in addition to this impulsive leg to the downside. So those are three, almost four pieces of evidence that we can use to validate an entry for this particular pair. In addition to that, if we go down to the daily time frame, we can see that we had a healthy retracement already within this channel that we've created, or that we've found, not created. And we can see we're up at the 60% level, which was previous resistance, support, resistance, resistance. So we're a little bit late on this one. However, there's still a possibility for us to come back up and kind of test this zone right here. So we can keep that in mind. We're actually going to move this down a bit since we want to get ready for some trading opportunities. And let's see. We can move our stop loss a little bit higher. And move our stop loss up to here, our take profit. So there's still an opportunity for us to get in. We did miss the most viable opportunity, which was up to here, the 61%, but there's still an opportunity to get in relatively close to where price is at currently, and still make some good money. But what happened is, if we go down to the 4-hour time frame, remember we created a script specifically to help you guys know whether or not you're in an environment based on our trading strategy. We can see we have a red hue, but then we have several darker red hues, which is telling us that we in fact are in a bearish momentum environment, and based on our strategy, we are ready to execute. So that being said, this is CAD Japanese yen. We are looking at some shorting opportunities because not only did our setup become validated, but our entry conditions are also validated. So we're just looking for an optimal entry zone at the moment. Other than that, we have four pieces of evidence saying that we are ready for a short. Our environment, contextual environment for our entry conditions, is telling us that we are ready for a short. All we need to do now is be patient and look for an area using shorting limits or sell limits, or manual execution to actually execute the trade itself. That being said, this is CAD Japanese yen. You can see that the risk to reward ratio is 1 to 2.56. which is a pretty good risk reward ratio. I like to be no less than a 1 to 1.2 at the bare minimum. A 1 to 2 is ideal, a 1 to 3 is what we're shooting for usually. So the risk parameters are not that great on this one because we did miss the entry zone. However, because of the pieces of evidence and the contextual environment, we are looking for a pretty valid setup with a high probability outcome. So we have two pieces of two take profits, TP1, which is a short-term trade, and in that instance, you'd be treating this as an intraday trade with tighter stop losses, and then TP2, which is the trade that we're going to be going after, is going to be the major structural zone. Now, we had set that up a little bit differently. We had actually pushed it down here, but because the 127 fib level is past and pretty close to this major structural zone, we ended up just moving it up here. So it's up to you, your discretion. You can go for the 127 fib extension, but we're going to play it safe and play it by ear. I'd rather take away some pips rather than be greedy and try to scrape away more. So this is Cat Japanese Yen. Hopefully you guys like this video. Comment down below and you guys are learning something and scrape away some pips along the way. I'll see you guys in the next video. Truly appreciate you guys listening and watching and giving us some feedback. Like I said, don't forget to like this video, share it with some other people, and I'll see you guys in the next one. Bye.